Hey everybody, this is Peter here with the McKernan Group. Want to talk to you a little bit about the new interest rates. Actually, the Feds just came out and the interest rates bumped a little bit. They were a little bit lower, so we started the year right in the mid twos, and now they've gone up a little bit. They've gone up from 2.73 up to 2.81, and I know right now that mortgage applications are down 6% and also refis are down 5%, and that's a difference from a month ago. It's February 18th right now, so it's changed at least the playing field for people that are looking for homes, because that small incremental change between what they were and then what they are now has changed people's minds on being able to refi, because those interest rates kept going lower and lower. There was 14 historic lows last year of interest rates. So now we're sitting at them ticking up a little bit. We kind of knew that they were going to go a little bit higher. They're still historically low comparatively, looking over the landscape of only 15 years ago, 20 years ago. We've been able to tick down to the middle of 2%. So that is drastic comparatively to when we started the crash, which was about 7%. It was about 6.85%. So if you look at that on a grand scale, it's completely different. You would save probably about, and I've done some videos, so we'll make sure that you guys see these videos on our YouTube channel, but we've seen a drastic change between that time and now, and you would be saving in the ballpark of about $10,000 a year or more, even if you bought right now. So I don't think that this is going to change the landscape of buying and also the market, where inventory is going to shoot up and we're going to have some type of issues. Just be cognizant, the interest rates are probably going to go up a little bit higher. They're probably going to go up to 3%, maybe 3.25%, and it really depends on inflation, and it depends on how good the economy gets. If the economy keeps getting better, then they'll keep raising them up just a little bit more. I know that the Fed said they were going to make sure that they slowly raised them. However, we're looking, and if you're worried about them going up to 5-6%, that's not going to happen, especially not this year. They may tick up to the mid threes, but right now they're staying at a little bit below 3, if not at 3%, and then they may go up to maybe the low threes. So just be sure that you're watching it. Make sure that you're working with a lender that knows exactly how much you should be putting down to make that the best loan possible, and then also make sure that you're keeping your credit up, because your credit's going to affect that interest rate too, and you want the lowest, at least the highest credit and the lowest interest rate possible, so you can make that money work for you, especially right now with the interest rates being as low as they are. So if you guys have any questions, feel free to comment below, or you can also subscribe to the channel. We put a lot of these videos out, so feel free to subscribe, and we'll put these out every week. Thanks.